Oh yeah, so many.
I
All
get
right. So
that.
yeah, go ahead, Tim, if you don't mind. I know you just did introduced yourself to us, but tell us a little bit about yourself, where you live and you're based out of, and kind of your role here with Zon.
Yeah, so I'm in Florida. I live in the Panhandle of Florida, or what some people call Lower Alabama,
Yeah.
basically. So LA, and probably about an hour north of Panama City Beach is kind of where we are. An hour west of Tallahassee is where I am here. Dothan, Alabama is probably the closest,
Hmm.
if you want to call it metropolis to us, that we have. So, but I've also got an office in Orlando. That's where I'm from. So I run an office out of Orlando. I've set up an office here where I am in the Panhandle, and kind of go back and forth on that on my day to day. So I've been running a practice, me and one other planner, and I've got a couple guys that I've hired up here in the Panhandle. Been running that since 2002. So just I went the independent route. Never had an employer, so that's kind of an oddity, I guess, in our business. Went independent at 22, right out of college.
Wow.
So and then yeah, I've been working with Zon since 2008. I taught different education programs, different places. Been doing the live review since about 2011. So I've been teaching live review for going on 15, 16 years now with them. You know, been pretty immersed in the CFP world for 18 years. So I must, been in the business since 2002, started teaching in 2008. So it's, for most of my career, I've been kind of doing both of these things. So pretty much all things CFP is kind of where I live. Whether it's in my practice, whether it's on on the coursework and things like that. But so that's definitely a difference.
Yeah, I've got a silly question and a very serious question for you to start.
Okay.
So you mentioned you do live reviews, so I know you're probably traveling all over different places in the States. What's your favorite place to visit whenever you do a live review?
I like DC.
Okay. Yeah.
I like uh, I like going there. Transit's good. Hotel location's great.
Hmm.
Um, get on the metro, jump into to the mall, see a bunch of stuff going on in DC. I like baseball, so I can go get to a Nats game pretty quick.
Sure.
I've got a map up on my wall of all the stadiums I've been to in Major League Baseball. So
Very nice.
you know, trying to knock them all off.
Yeah. So that leads to the next question, right? The next silly question for you, which is your favorite stadium so far that you've been to?
um, it depends. I favorite stadium. Um, so I try to go to usually it's just me, so I'll spend a little more
Mhm.
money on the tickets and get the nicer, luxury seats and stuff. So Nats Ballpark in DC actually has a pretty nice stadium. Atlanta's got a really nice stadium behind, right, nice club behind home plate.
Yep.
The Mets have a speakeasy in their field, City Field, New York. So that's pretty cool, pretty different.
Yeah, that's neat.
Um, so, um, but I haven't been to Pittsburgh yet, and I feel like the
Yes.
if you watch baseball, that stadium, the way it looks out at the city is pretty cool. Um, so
Yeah. So
it's
I'm a baseball guy too. I know a lot of our students are LA people, so they're probably Dodger fans. But I
okay.
had a chance to do the a Padres game a couple years ago, and it was a
I've been there.
wildly better experience than Dodger Stadium. So
See, I went out and I did a class in LA a couple years ago, but the where we have our class by the airport and getting out to Dodger Stadium is not going to be conducive for a 7 o'clock game. We finish class at 5:30,
yeah.
unless I had a helicopter. So
Yeah.
I've been to Anaheim. It's the only West Coast stadium. What Anaheim, and I did go to T-Mobile last year in
Hmm.
Seattle. Um, so I've been to those two out there. I've got to get to some others.
Yeah.
Uh,
I know. I
so I
also
do.
we've got a few students from San Diego area too. So I'm making friends, not just enemies on here, I think. So
Yeah. Well,
yeah.
I told my wife, I said we need to get a West Coast trip so I can get the other couple. I got to get to San Diego and LA and San Francisco to kind of knock off California off my list here.
Absolutely.
So
All right. So the serious question I was going to start with is knowing that you've been in the CFP world quite a bit longer than a lot of people, right? Who maybe would have gotten their certification in the last 10 years. In what ways have you seen the CFP designation changing over the course of these last almost 20 years?
Um, I mean, as far as the test, or as far as the designation and
Probably the
itself, as
designation,
far as
but
the
yeah,
professional
also the
side of it.
test even. Yeah,
I mean, so as far as the designation, before when I first got the designation, people were like, "Well, what is that designation?"
right.
Um, and the kind of the snooty remark to that was, um, well, the clients that you want to have know what the designation is. You
Right.
know,
Yeah.
the people that are looking for a CFP are looking for one for a reason, right? And that was kind of the whole, like, don't worry about if the general public doesn't know what a CFP is, because that's not who you're trying to attract as a client.
Hmm.
I think that's kind of gone away. I think that mindset has kind of gone away. They've got the public awareness campaign is there now. So I mean, advertising, you're seeing stuff on. Speaking of baseball games, I mean, right back behind home plate, you'll see it. If you watch some games on MLB TV, you see it's got to be a CFP
Hmm.
plastered up behind home plate during the game, and so and other things like that. So I think it's becoming people becoming more aware of it. I think the younger generation of people is getting more fee conscious and more conscious of doing things on their own. They're searching for things, and um, you know, AI and everything that's going on. I feel like the designation, it's a way to hold the value for yourself. The whole, it used to be where the financial advisor was just, hey, you're out there managing money for people, right? I mean, if you're a financial advisor, the only thing people thought of a financial planner was they manage money and they help
Right.
you invest. And,
Hmm.
it's so much more than that. And I think the education of that, uh, it shows your value, the value proposition there. Plus, you're held to a higher standard, right? I mean, so it doesn't hurt the fact that you're held to a higher standard with the designation as far as the ethical side of things and
Yeah.
how that goes. So I think that's become better because it's more well known um, in that side of it. So,
Sure.
and
Yeah,
they've
that's
gotten
a
a
good
lot of
answer.
resources to help you. They have a lot of resources out there to help too. Planning checklists and documents on how to do research on technology and what technology providers should use, just things like that. So
Hmm. So I'd begun really diving into the field in 2014 when I started my PhD. And even then, the emphasis at that point was starting to move in the direction of being a planner focused field, right? And so I've always mentioned that whenever I teach classes on the subject, and also being a practitioner, is that people come in, they expect a lot of times this assumption is that you are an investment manager first and foremost, right? That's the
exactly.
hat that you wear. And so reorienting clients to the expectation that planning becomes the foremost role that you play. Obviously, there's a lot of roles, but that becoming the most important one, even with them, that's still something that you almost have to define in every client meeting if you're going to meet with a new client.
You do. I mean, I use the kind of scenario. Every client comes to you for a certain thing, right? I mean, I met with a young lady this morning, doing great. She calls and wants to open a Roth IRA referred from somebody else, and the client comes knowing what they want. I mean, it's like going to a doctor knowing what drug you want to get.
Yeah,
Before you can actually look at them and diagnose, do they need that drug?
right.
They're coming in the door wanting that IRA, and that was the conversation I had. Was like, well, yeah, we can open a Roth IRA for you, but I don't know if it's what you need. I don't know if it's the best, first step that you should have. And I told her, so it's like going to a doctor saying, I need this cholesterol medicine because I think my cholesterol is high.
Right.
Well, did the doctor do a physical? Did they do blood work to find out?
Mhm.
Or did you just say, okay, here you go?
Yeah,
So,
exactly.
um, and people they don't understand that. They think that, and I think because there's so much available online, it's I can just go open an IRA at Fidelity or whatever, just online, E-Trade, whatever it's going to be.
Hmm.
They're not going to tell you whether it's right or wrong for you. They're going to open the account.
Hmm. Yeah.
You know,
Yeah, a lot of times conversation leads down the road of even something maybe smaller that could be I don't know, transactional in nature, right? Even for a younger client like that. Even just getting to the point where you ask the question, I usually ask the question. Um, I want to get to know you. I have to get to know you in order to make even a small recommendation, right? And so you can't just throw out there. I mean, you could. You probably are right. Not most people can't go wrong with opening a Roth IRA. But do we really know that's the best route? Well, not until you as a planner get to know the client. So those are all things, of course, that go behind the scenes, I guess, so to speak, right? Whenever you're talking about the CFP and the designation.
You almost
A
have to
lot of
talk them
what,
out of it, right? You're like, all right,
yeah,
let's not do that yet.
yeah. I mean,
Let's wait.
sometimes, right? Like you deal with someone who has a mountain of credit card debt, or need to be prioritizing focusing on other things in life. So yeah, I've said no to Roth IRAs before, which sounds kind of
100%.
yeah,
Yeah, well, we didn't open anything this morning, and I told her to bring her father-in-law and her stepfather in next week and talk.
yeah.
Um, so that, but I mean, it's just that kind of stuff. I mean, it's the whole assumption that, hey, I'm just going to come do this, and then we're going to jump from there. So,
So, a lot of our students are mostly undergrad in this class. There are a few graduate students, right? Many of them are this is the capstone class. So they're finishing off their work at Biola. Dr. Shane Annette is usually the one running the show, but he's on sabbatical. So I get the kind of help the students finish out strong in
there
this
you go.
last course. And so I don't know, have you ever met Shane, Dr. Annette?
I've done the class for you guys before. I just don't remember who did it with me.
Sure. Yeah.
I think I've done several over the last couple of years.
Hmm.
Um, I don't remember who it was that that ran it, so I may have.
Gotcha. Yeah. So I live in Missouri, and was able to connect with him at Kingdom Advisors Conference, which is in Orlando every year. And so all that being said, I just wanted to kind of start in the discussion of this mock exam with a little bit of a reference point. I know a lot of students, the very first question that they're asking me after they see the results is like, will I ever? Is this the discourager from me ever getting the CFP? And so if you don't mind, Tim, dive in a little bit to just, hey, I added up my scores. I got a 40 to 50%, to those students who did that. And maybe some of them did a lot better and everything else. But what's your hot take from 10,000 feet above, right? Looking at a rough score of how they did.
Yeah, and so we're transitioning you from education to test prep here,
Okay.
and that's a big difference. Um, you got to know the education stuff, what you have to know. But when you go to sit and take the CFP board exam,
Hmm.
it's test prep. And how do I answer this question? How is this going to be worded? How do I make sure I'm reading what it's asking uh, the right way? And so that's what we use this kind of capstone assessment is what we call it internally, kind of to see, here's some questions and here's the ways that they're going to try to trick you on the exam. And so part of this is are these questions are a little tricky in what you're reading. So what we try to start you looking at here is did you miss questions that are on this assessment because the topic was unfamiliar? Or did you miss questions on this assessment because you read the question wrong and answered not what it was asking? And that's kind of the first step I feel in getting ready for the CFP board exam. Now, some of you guys, I mean, you got to think too. We give you a little bit of a hall pass here because depending, you're undergraduate, depending on when you took an insurance type course or a tax or retirement or VP stuff. I mean, when's the last time that you looked at that or some of the terminology that's there? So it's very fair in some of these questions that you were familiar with, at least on a higher level, the topic, but you just hadn't looked at that definition or that thing
Hmm.
recently. So some of it is just us, kind of going and shaking the bushes and trees to throw out some stuff that maybe you haven't looked at in a while. So that when you start to do the test prep thing, hey, we gotta go back and refresh that some. So it's tough. And now, if you guys were more of a certificate program that's in 10 months,
Hmm.
you know, I don't give them that hall pass because it might not have been 18 months or 2 years, whatever,
Yeah,
before since the last time they looked at some of this stuff potentially.
that's a good point.
And so the other part of this is even people who work in this field every day, they're not looking at every one of these topics every day and every, part of these topics every day. And so if you don't really stay fresh on it and constantly review it, you're forgetting it because you're not using it in the office on a daily basis. And we see that a bit too. Um, so I this is really to kind of get them a refocus on, okay, if you're going to sit for this exam, this is kind of where you need to start getting to. Um, and there's a lot of opinion-ish type questions that are on the test, right? And so how do we dissect those opinion type questions and make sure we're answering what we need to answer?
Yeah, so one of those types of questions I know that it comes up, it seems like is a focus is students when they ask the question. So a lot of times it says you were giving advice, right? And then the options are listed that aren't really advice. Would that be an example of that type of
100%.
question? Yeah.
100% of, it's you got to answer the question, right? So if they're asking you to give advice, then your answer should be advice,
Mm,
not just a factual statement.
right.
And there's a couple on here that we'll look at in a minute that are that way, where
Yeah.
when you actually take that mindset and go back and look at it, you're like, oh, there was only really one choice here that was an answer, and I probably could have answered that whether or not I knew anything about financial planning.
Hmm.
Uh, and that's when you kind of step back from that, it looks easy. But for some reason, when everybody, you've gone through this whole education rigor and you've learned all this stuff, and then we ask you a question, and there's this really juicy factual statement there that sounds really good
Right.
and really would make you feel like you're telling somebody some information, but it's not answering the question, but it's like the bait.
Hmm.
It's like going fishing on, down in the Keys, and you're going to throw a block of chum in the water, and we're just trying to catch you.
Yeah.
Um, that's kind of those questions, right? It sounds really smart, really sophisticated. Meanwhile, the answer to the question is like yes or no over here. That's it.
So if you don't mind, Tim, you mentioned you got some questions lined up that we're going to go over. So would you want to go ahead and start there, or do you got some other info
Let
before
me
then?
see. Am I able to share? Yep. Cool.
Yeah, I think you should be able to.
So I'm going to share, and I've got a list of which ones from each, module that were the most missed by the class, and that's kind of what we generally cover. If there are others, so if anybody as we're going through this, that's here. I know there's only a couple of you, but if any of you want to talk about any others than what I'm going to mention, feel free to just kind of say, hey, Tim, let's talk about this one too. All right. So feel free to chime in as we go through these. But on general principles, we're actually going to look at, and these are the ones that were most missed. That's kind of how we gauge them. So I think it's like I think there was 13 or some 16 total that took it or something like that. And so I think if like more than 60 or 70% of you missed it, we're going to go through it. And so there was only two in GP. So that's actually pretty good for the group. There's only 16 questions total that the majority of the class missed through this whole thing. So that's
Hmm.
actually pretty good um, on a high level. So the first one is number one. This is a net worth question, change in net worth question. And this is a typical, you know, there's some stuff in here that you don't need.
Hmm.
There's some stuff in here that you do. There's some stuff in here that's a wash. Um, Anytime I see a question like this that just has numbers in it, 99% of the time, the actual question is at the end, right? I mean, so what people do is they read through the whole question, get to the question, and then they got to read through the whole thing again to look at what numbers they need. So skip that first part. Just let's go to the last sentence or two. And really the main question here is what is their change in net worth? Right? That's what we're trying to find out. What is their change in net worth? And now I know what I'm looking for, so I can go back and start to get rid of stuff I don't need. The W-2 earnings of 100 grand doesn't mean anything to me. That's the cash flow thing, doesn't change your net worth. I get rid of it. It says they deposited 5 grand into each IRA. That was in their checking account. That's an asset to an asset. That doesn't change the net worth. It's just an asset to an asset on the balance sheet. That's another piece that I don't need. Goes away. Um, Sold their car, 5-year-old car, for 1,000 less than it was worth. Well, in that case, there, 1,000 less than it was worth. I had a value on a balance sheet, make up any number, but you had a value on your balance sheet. You sold it for 1,000 less than that. You just had a decrease in net worth.
Mhm.
Right? I mean, so now that's a -1. And then the housing market, my home went down by 25 grand. So absent any other information here, I've got a decrease of $26,000 in net worth in this question. Okay.
Right.
But I've got to understand that 100,000 they made, it doesn't say they took any of that money and put it anywhere as an asset. They used money out of their money market to deposit, or checking account to deposit their IRA. So that's, if they would have taken that, 5,000 out of their earnings, out of their cash flow, and deposited that to the IRAs, now we would have had a different story. Okay. So that's one that and people aren't used to having somebody lose net worth. That's the other struggle. Most questions are written where people are increasing their net worth on an annual basis, not decreasing it.
Right.
And so that's one of the things. So knowing the relationship between the net worth statement, balance sheet, cash flow statement, how that works, I think is important. This type of question, I don't know if they're going to ask this exact thing, but you would have to understand conceptually what's happening here, on the test. Okay. And again, if you guys have questions as we walk through these, let me know.
Yeah. Yeah. Don't hesitate to speak up as you get
Yeah,
through these, because there's a lot of these are going to be, yeah, there's a lot. There's gonna be some that you guys really probably. I mean, I took it, and I've got some questions behind the scenes as well if we get to ours. So yeah.
yeah. So and again, this is casual, guys. I want to make this as we can talk back and forth there. Elias, did you have anything that you want to talk about on that one, or
Would you mind going back to it really quick? Just to clarify, I think I missed it somehow. Would it be the 26,000 that's the change, because of the depreciation and the home value decrease, or would
Yep.
you? Okay, okay. Thank
Yeah,
you.
you got 1,000 here,
Yeah,
decrease, right?
yeah,
You got a 25,000 here, decrease.
right. Perfect. Okay. And you would disregard the 100,000 because that would already be incorporated, right, from last year?
Well, the 100,000 is the cash flow statement,
Right.
right? So we're working on the balance sheet here, and so the cash flow statement, I can make 100 grand. The problem with most Americans is none of their cash flow statement makes it to their balance sheet.
Yeah.
Yeah.
It's all an expense, right?
Right.
So this is a typical American here, right? They don't save any of their money. It all goes into frivolous spending, right? Disney World trips and things like that. We appreciate it down here in Florida. Helps keep our property taxes low and no state income tax.
Yeah.
Right. Thank you. My name's Elias, by the way, just
Oh,
for
Oh, Elias. Okay, sorry.
thank you.
Thank you. All good. I appreciate your answer.
All right. Yeah, man. So number 9 is the next one. And again, anything in between those, let me know, and we'll come back to it. Okay, but number 9 here, this is one of those questions where you're gonna kick yourself if you missed it, because it basically says, Jim has a home worth 350, current mortgage 280. How much of a loan can Jim take from the bank if he wants to purchase a vacation home in the mountains, valued at 200,000? Does it ask about deduction?
Yeah.
No. Just ask about how much money can he borrow. And so this is almost like the cynical answer, or the smart aleck answer to this. It's like the answer your parents would give you, like, well, you can borrow as much as the bank will let them borrow. Well, that's the answer. It's like, well, how much can I go get from the bank? Well, however much they'll give you.
Hmm.
You know,
I feel like
people
there's
ask me
so
what
much
I
less information there, right? The other three have nuggets, but not not the right answer.
right. And
Yeah.
that's the part that, but see, what happens is your mindset when people see this type of question, ignoring the answer choices. When people see this type of question, they automatically go to the rules they understand about deductibility of mortgage interest. And that's where the mindset goes for a lot of people. And they feel like the question is really talking about how much can they deduct, how much of the interest would be deductible, even though it's not asked.
Yeah.
And they imply it is there. And so, if you look at A, he'll be able to borrow and deduct 70,000 of his home equity toward the vacation home. Well, yes, if this was back in 2017, that was, you could do what? You could take home equity interest. So the old rule is there. Like we were using parts of the pre-Tax Cuts and Jobs Act rule, which is 2017. So most of you were in high school when this changed, or something. And so most people don't even realize that this was it. Okay. How many of you went with C? Anybody go C here?
I might have. Honestly, I might
C's
have.
C's a true statement. That's part of this whole it's not the right answer because the question's literally saying how much can he take out, right, and borrow. But C's a truth. It says that the Tax Cuts and Jobs Act disallowed home equity interest that are not to buy, build, or improve the homestead. That is 100% true statement. It is factual, but it doesn't answer the question. So a lot of people go to that, but doesn't answer how much can he borrow. So this type of question right here, and I'm not on Team CFP board here. Okay, I'm going to tell you. This is the type of question that shows up on the CFP board exam, and you've got to learn how to take a test to pass this financial planning exam, which makes no sense to me, but this is how this test is. And so this is part of what we try to get you guys to recognize in questions. These are the types of questions that you end up seeing on the exam. More than just straightforward, what is this, what is that type of questions. Okay. So any questions on this one? Okay. Any questions on any of the other ones in GP? Because those are the only two in GP that we had that I had marked that they sent me to talk about. But seriously, if you guys have any other ones, we can hit on them. I think there's only 3 of you here, so you might as well. Pretty good ratio.
Kate, you got any?
No, I just missed number 9, so that was helpful going over that one.
So you see where it's frustrating, right? You look back, just like, how did I miss that?
Yeah.
It's a very, yeah.
And I actually did put C, so yeah.
So the frustrating part here is too, it doesn't mean you don't know the rules.
Right.
And that's the frustrating part for people who, like, if they don't pass the exam, they're like, I knew all of this stuff. How did I not pass the exam? You didn't pass the exam because you missed questions like this that really aren't testing your ability to be a financial planner. They're testing, did I read a question?
Right.
Unfortunately.
No, and that's helpful to like even shape my thinking. I'm like, oh yeah, that makes sense. When I read it back now, I'm like, oh yeah, duh. Like,
you're like,
so it's like helpful to even hear you and like to be like, okay, yeah, that's the way I need to like shape my thinking for questions like these.
So one thing you guys can do, and I don't know if you have the ability to do this kind of on the version that you have, but the CFP board exam does allow you to highlight parts of the question. And I know that sounds really like, why do I want to do that? Because sometimes the questions are longer and you want to actually highlight the part of like the actual question so that when you pick an answer, you go back and look, am I answering what's highlighted with this answer? Whether it's a true statement or not, am I actually answering what I highlighted as the root of the question in my answer? If my answer that I picked is not answering what's asked, it might be a true statement, but not the answer to this question. It's just that kind of double checking of yourself, right? All right, so I'm going to go to insurance unless somebody has any more here in GP. All right, so insurance, we had number 4 and 5. Now, some of these in insurance, if you missed them, some of them, like if I look at 3, it's definitional, right? And that's one of the ones when I mentioned before, we're not going to go over it, but it's definitional. Like what's a risk, what's a peril, what's a hazard? Those are things that I feel like even if you missed it, you're going to go back and study and you're going to know what those are. That's not going to be something that I would stress out too much about. But when we get here to 4 and 5, people miss 4 and 5, pretty much everyone, every class. So don't feel bad. 4 is more definitional as well. And if you haven't seen insurance in a little while, or you're not sure what side of the table was here, the answer to this question is B. How many of you went with D? If you got it wrong. Either one of you
Yeah,
go.
the answer was B, right?
He is right. Yeah.
Yeah. Yeah.
Did you go with B? Did you get this one
Hmm.
right? I'm not
Yeah.
looking at the list of who got what right or wrong. I just
Yeah,
wrote down.
I got this one right. I got 5 wrong, but yeah, I did go with B on that one.
So risk avoidance would be, and this is where people kind of get the wrong side of the contract, right? Insurance is a contract thing. I get to deal with insurance all the time in what I do. And so risk avoidance would be you just not doing something, right? The insurance company doesn't risk avoid. The insurance company would not take you on as a client due to adverse selection, meaning you don't meet their underwriting guidelines. And that's kind of what this is describing here. But a lot of people go with this risk avoidance. Okay. Let me see if I can mute. But that's where this risk avoidance comes into play. So those are normally the two. B is the right answer. D is sometimes picked on this one. And so that's where I would that's definition. Number 5, however, number 5 is the fun one. So you said, Kate, you used number 5.
Yes, I think I put C for number 5.
Yeah. So 5's an awesome one. And this is one that's going to make you feel even worse than the one on the previous test. I'm sorry, but on general principles. The question is asking, what do you tell the client? So it's basically saying, in advising him on how to respond to the risk, what do you tell him? So it's telling you, give the person advice, right?
Yeah.
And this is kind of, Ben, you hit on this before we got into these.
Mhm.
This is kind of the typical, there's really only 2 pieces of advice here, isn't there?
Yeah.
So if I
and-
look at
or
A
and
and
C.
C are definitions.
Yeah.
Yeah, they're statements,
Yeah.
right? I could debate all day whether one is right or the other's right, whatever, but they're both just dissertations of fact, basically. Okay, it's here's a fact, here's how this works. So you've got either B, reject, or D, accept. Those are the only possible answers. And honestly, once you look at D, you're not going to be in the business very long if you do D. You're never going to tell a client, let's do this, and we'll worry about the loss when it happens. Ever. That is like your E&O, whoever's doing your errors and omissions insurance is going to like say, no, we're not taking you on as an advisor. And so once you kind of look at this and you say, okay, I can't go with A or C because they're not advice, whether you think they should accept this contract or not, the second half of D says, no, 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 no. I am not telling my client to let's just worry about this loss down the road if it happens. And so you have to go with A here. It's really only, I'm sorry, B here. It's the only viable choice that a planner can make. So this is one of those where once you see this, you're like, yeah.
And the other thing, I think you could probably spend 25 minutes reading through this and thinking back and forth on things too, right? So you're almost giving us a shortcut.
It is. And this is part of what we do in the review course as well. We start to try to help you guys. How do we dissect these questions? Because you got 2 minutes of question on the exam, the national exam. If you take out the number of questions on the national exam plus the time you have, the 6 hours to take it, you got 2 minutes of question. So you don't have the time to kind of, lollygag back and forth on some of these questions. You've got to kind of, how do I get rid of stuff quickly and then see what I got and go from there. Okay. Anything else on insurance that you guys want to discuss? Because those are the only 2.
Yeah, I actually did have a question about number 8. It just is asked about the limit for a medical expense FSA.
Yeah.
What's the difference between like A and B?
So it is A,
Yes.
because you get a total amount for the family. You don't get it's not a per family member thing.
Okay, so it's like basically for like a household versus like for the individuals of the household.
Yeah. So
Okay, got it.
with a flexible spending account, you don't get $3,400 per. Like I got 4 kids, so me and my wife, my 4 kids. If I did an FSA, I wouldn't get $3,400 for each of us. I would just get one $3,400 pot. That's it.
Okay, got it.
Okay. Thank you.
Sorry, would you mind looking back at question 5 one more time? My Zoom quit and it wouldn't let me see the screen.
Okay. Is that better?
Yeah, perfect. And what was the conclusion for this one?
So the answer here is going to be B. Because if I look at A and C, those are both just factual statements, right?
Mhm.
There's no, the question wants you to give advice.
Right.
And so A and C are just statements of fact. There's no real advice there.
Mm.
And you're not going to ever really tell a client, hey, we should do this and then worry about the risk and loss if it happens.
Yeah.
That's not a good mantra to have.
Mhm.
Um, so whether you think based on the question, this will come up on the exam, whether you feel like based on reading the question, it's a risk they could take or not, you really can't tell them to accept it because the only accept answer has you saying, well, let's worry about the risk if it happens. Well, that's pretty scary for you to tell your client that.
Yeah, that makes a lot of sense. Thank you.
All right. So investments. This first one, and I know everybody signed up to try to be a CFP so you can tell people about FDIC insurance, right?
Yeah, right.
That's 100% what I just all day I talk about FDIC insurance with all my clients. Said no financial planner ever. The only time it actually comes up is if a bank fails. They'll call you and be like, "Hey, am I okay?" Sure. You know, that's kind of, it's every couple of years. However, it is one of those things that they ask. It will show up on the exam. And I'm going to let you guys know investments from what we see is probably one of the most failed portions of this test. And I think it's because people have this false sense of I know it because of it's in it, I mean, heck, it's on half of your business cards in the business. I'm an investment advisor, for God's sake. But the stuff they ask on the investments module and the stuff you learn throughout this module is nothing that you're doing on a day-to-day basis when it comes to investments. You're not calculating this. I'm not calculating beta and standard deviation every day for my clients. I wouldn't have any time to talk to them. I'd be just sitting here doing math all day. And so, some of the questions they ask, I feel like are, you don't think that, oh, they're going to ask that. And so it gets overlooked. Plus, it's math. And for some reason, financial planners are really bad at math sometimes. And so go figure, but they are. And we see them in our review class, and they're like, I had a guy walk into my review class last cycle, and he'd never even turned his calculator on before. He was like, this is the first time I'm going to turn my calculator on today and try to do some of these calculations. So wished him well. But so this first one is not anything that's kind of what I would call super hard, but you've got to know the different titlings, right? So there's 4 titlings. You've got individual, joint, IRA, and you've got either what they'll call POD, payable on death, or revocable trust type accounts, where each one gets 250,000. Okay, so a lot of times they don't even get to the POD type accounts or the IRAs. It's the joint accounts that really mess people up. I get 250,000 that is FDIC insured per aggregate of all of my joint accounts with other people up to 250. So I also get 250 individually. So here in her name, she's got 300, right? So I'm going to lose 50 of that, aren't I? So I'm going to lose $50,000 of that because I can only have 250. So the way I answer these questions is I back out what is not insured versus the total. So I'm losing 50 of this. So now I'm down to 250 here. So out of the 900 total, I'm at 850. So any answer that is greater than that, this one here, E, I would cross off, get rid of it, can't be the answer, right? Because it's greater than that 850. Well, now the first amount with her son, that's 300. 150 is hers, 150 is her son's, according to the titling, which means 150 is FDIC insured here, 150 is FDIC insured there. Okay, well, now the second account breaks out the same way, 150, 150. But if she gets 150 for both accounts, now she's at 300. So she's going to lose 50 of her 300. But the son has 150, daughter has 150. So it'll actually end up looking like this right here. So here's your 250 from above. Okay. Son, 150, 150. Daughter, 100, because she can only have 250 total in her name. See that for her title? And then both kids end up getting their whole 150. You can't give the 50 I lost to the daughter. A lot of people try to do that. Okay, can't do that. So in total, she has what, 500? Kids are going to have 3, so my answer is going to be 8. All right. Don't feel bad. I have not had a class in 4 years get this one right.
Gosh.
So as easy and simple as it sounds. it is something that we drastically overlook. For some reason, we overlook the stuff that we feel we know, or it's not going to be tested or too easy. It's not CFP-ish enough, and they don't do it. Okay. So that's that one. And then we've got 8. So what'd you guys put for 8? I'm gonna call you out here since there's only a couple of us,
Probably A.
even though it's being recorded.
I think I put A.
I put A as well.
Yeah.
So that's beta, right?
Mhm.
Volatility is beta, variability is standard deviation. And so volatility is beta. C is nonsense. D is actually the information ratio. Is what D is. You guys use the information ratio at all? Most people don't. But it's on the formula sheet, so fair game
Mhm.
on the exam. So that leads back to the thing. So consistency of portfolio performance. So if I think consistency, I think of the bell-shaped curve, I think of the mean, right? And how much does something vary about that standard deviation, or vary about that mean is my standard deviation, which kind of comes back to how consistent am I? The lower the standard deviation, the more consistent my portfolio hits that mean. This is where you're going to get somebody on the exam who they call it the nomenclature of the test, right? It's kind of if once you get out in the real world and start doing work, you're going to have one attorney call something one thing, and another attorney call the same thing something else, and another attorney call the same thing something else. That's why there's 7 different names for a bypass trust, right? And it's similar to this type of question here, where I got you guys to this answer by getting rid of the other stuff, didn't I? And that's a process that you can do on the exam that will be just as good as you knowing what the right answer was to begin with. And so there's going to be plenty of questions where you read it and you're like, I'm not really loving any of these. But if I know that beta is volatility, that gets rid of A. Kurtosis has nothing to do with standard deviation, really. It's this, and D is not it. That's how you start to try to, okay, can I get myself to an answer by not knowing what the question is even asking or what the answer is? Yes, you 100% can. And that's part of what we try to teach you how to fight your way through in a review our prep course as well. Okay. So trust me on the exam when I tell you in no time are they going to be asking your opinion. So if they say, what should you do or what would you recommend the client, they don't really mean you. Okay. And so that will mess with people quite a bit. Okay. All right. Any other ones in investments that you guys had questions on? Okay. All right. Tax is my fave. Good stuff. All right. So UGMA, they like this. What do you guys put here? Number 5.
Like that's a question you really do need to know a little bit of the how an UTMA is taxed, which is not, unless you're going to ask Gemini, it's probably not a question you know off the top of your head. Did any of you guys know it?
I think I actually forgot to answer this one, which I didn't realize. That it says no answer. I don't think I gave an answer actually. I must have like mentally been like, oh, I'm gonna go back to this one and then forgot to or something.
It happens. If you
Yeah.
do that on the exam, just put something.
Yeah, just circle something. Okay.
So
Yeah, don't lose points.
this is a practitioner question that I've gotten a lot, which has helped me remember because it's 1250, right?
Well, it's more now because it goes up every
free.
year. So it's
Yeah,
1350 is free,
1350.
and then it goes up every year.
And
But
then
yes, you're on the right track.
1350 more, and then after that, you're taxed at your parents' bracket, which is why it gives you that information.
Yep. Got to give the parents bracket. And so anytime you see a question like this, the first 2,700, you're going to pay $135 of tax.
Yeah.
So in this case, the first 2,700, you get the first 1350 at 0%, is what he was saying. And you get the next 1350 is at the 10%. So if I see something that's north of that 2,700, I just take the 4,300, subtract the 2,700 from it, multiply whatever's left by the parent's rate, which in this case is 32%, and you got to add back in the 135 because you're paying 135 on that first $2,700. So this is the kiddie tax, and we do definitely cover kiddie tax and how to calculate it and all that stuff in our course, because they like to ask it. According to the CFP board, kiddie tax is a plague worse than COVID. By the way, you want to avoid it at all times. No kiddie tax. So, but when we show the math on it, it's actually not that bad.
Yeah, it's not much. Not, I mean, most people don't, let's be honest. Most people have UTMAs that are never going to be that much. So,
Yeah, I mean, you got to make the money, right? And so the only times we'll see UTMAs that do have this issue is, there could be good capital gains years, right? I can make, you have 20 grand in there and that thing makes 20%. You got $4,000 of capital gains potentially, if they sell the item. Now I got to go back and figure it out, but it's still better than the parents rate,
right.
because the parents are in 32%. If they own the whole thing, they pay 32% on the whole thing, not just on the amount over 2,700. So it's still, something that I've actually used this for clients in college planning, where the parents might have a brokerage account with a stock in it that has a, lower basis, right? And so I can, instead of me selling it in the parent's name, gift it to the kids, use the annual exclusion, we sell it in the kid's name, and we use this first $2,700 to avoid tax at the parent's rate. And now the kids have money. So fun planning stuff around this one. Any others in tax? The only other one in tax actually isn't even tax. It's a psychology, number 10. That was the only other one that we had. And unless you really study definitionally what some of this stuff is, heuristics. Heuristics is learning by experiences rather than a formal education or formal training. So in this case, it's about a light socket, and you would learn by heuristics by sticking your finger in the light socket so you can tell people not to do it. That would be the heuristical learning side of this. Could be like the day trader that tried to learn on his own, his or her own, to day trade, instead of actually taking coursework and learning how to trade, and whether fundamental or technical. So anybody who does something by means other than a formal education or training. So if you look at A, B, and C, those are all what? Learning some type of way, right? Heuristics is, learning by, hey, I stuck my finger in a light socket. It was bad. Don't do it. You didn't read on it.
Do you see more of these questions? Is this becoming a new emphasis, Tim? More behavioral finance questions?
Yeah,
Psychology?
there's a whole section of the exam on it.
Right.
So there's a whole section of the exam we give out as part of our review. It is a section of the review and questions, and some of these, what is heuristics, cognitive dissonance, different biases that are there, changing the decision makers process, thoughts, things like that. And honestly, being in the real world, this is kind of, psychology could be the whole test, because that's kind of what we do. We basically keep people from messing up and psychologically doing harm to themselves with their own accounts a lot, right? I mean, that's kind of, over the last month, how many people wanted to sell everything because the market's going to, just be terrible, or something like that. So, but yeah, we do, and we have a whole section on it. But it is something that I think is you want to know it. I think real world application is big for that too. Okay. All right. Retirement. Let's talk about retirement. So 3 and
Can I actually
9.
ask one question on the insurance one?
Yeah, what you got?
Or wait, sorry, the tax planning. Sorry, the one we were just doing. For
Yeah,
question 9, I got it wrong, and I was kind of reading the description because I put 0, but then I understand now that it's C, the 400,000. But can you explain to me more about the Section 121 exemption and what that is and how that plays into the question?
Yeah. So Section 121, you familiar with it's 250 or 500,000, right? Depending on if you lived in the home 2 out of the last 5 years. Are you familiar with the actual code?
It's familiar, but I don't feel like I know it really well.
Okay. So, well, that's all you've got to know. You've got to know if I've lived in my primary residence 2 out of the last 5 years.
Okay.
If I'm single, I get a $250,000 exclusion. If I'm married, filing joint, I get a $500,000 exclusion. That's kind of what you've got to know gist wise for the exam.
Okay.
And it's primary residence. It's not a rental or a vacation home or something like that.
Okay.
So this question is really asking, do you know the difference between realized gain and
Mm.
recognized?
Mm.
So both of these things happen on the Schedule D. So when I read this question, bought it for 2, sold it for 6, right?
Yeah.
So bought it for 2, sold it for 6. They are married, it looks like, right? Bought their home. Okay.
Mhm.
And so what must they report? So we got to kind of go with that. Now, so they have a $400,000 realized gain. The realized gain comes before you take the $500,000 exclusion.
Okay.
So if you take the $500,000 exclusion, that becomes the recognized gain of 0 at this point.
Mm. Okay, totally. That's totally what I mixed up then.
And these
Because
are
that,
and
yeah,
these are
because I
both
said,
on the Schedule D.
okay, perfect. That
So
that clears it up.
this type of question will show up on the exam because financial planners tend to be bottom line people. Like,
Mm.
what's the bottom line? Like,
Yeah.
I'm not worried about this whole stuff. What's the bottom line? And so the bottom line here is 0. But they weren't asking the bottom line. They were asking a step before you
Yeah.
took out that exclusion.
Okay. Yes. Perfect. Thank you so much.
All right, number 5. This one's not nice. Or number 3, I'm sorry. The maximum that can be deposited to a defined benefit plan. What did you guys go with here?
Sorry, I'm looking it up. For 5, you said?
Oh,
Number 3.
I'd probably put
Was
A,
it?
B, C, or D. I'll bet the answer is E then, right?
It is E.
Yeah, I
Yeah, I
don't
put
know.
E.
It is E here. So to defined benefit plan, there's not a maximum that you can deposit. It is based on the actuarial's calculation, right? So that it's based on whatever the actuary comes with. Now, there's a maximum that I can solve for, right? There's a maximum that I could use as far as eligible compensation is 360. There's a maximum that I could use as far as salary, which is 290, right? If this was a defined contribution plan, 72,000 is the 415 limit, right? So you see that we're putting different limits here, but none of those are the limit in what I can actually contribute. Think about it. If I've got a 60-year-old who's retiring at 65, making 300,000 a year, I might have to put 400, 500, 600,000 into this plan to get him for that targeted income in 5 years for the rest of his life. And so defined benefit plans, you're defining the benefit, not the contribution. Whereas if it was a defined contribution plan, there's the limit on what I can actually contribute. So it's one of those kind of evil, type questions. That does not mean you don't know the limits. And they give you the limits on the exam. They give you a tax table on the exam with all the limits and all the phase outs for retirement. So you do not need to memorize those. So IRA phase outs, deductibility of IRAs, all the 415, 401, 402, all the limits are given to you guys on the tax tables.
So
IRA
really, the
contribution.
question's asking, do you know the difference between defined benefit and defined contribution? Really,
Yeah,
right?
Yep. Yep. All right. And then what was the other one? Number 9. So number 9 is a question of who are we trying to help here? So I've got, should the owner, 73, of a company change the employer-sponsored SEP, super inexpensive, cheapest plan probably out there, to a profit-sharing plan? Anytime you think of a qualified plan, think government, expensive, pain. It's kind of way more expensive than a SEP. So should they do this? Well, the first answer says yes, it would allow the owner to delay RMDs. Can the owner delay RMDs in a qualified plan? No. See, the owner is not going to be able to delay. Could the employees? Yeah. If she changes from a SEP to a qualified plan, which is the profit sharing, she could delay, the employees could delay RMDs, but the owner could not. The owner's going to have to take RMDs either way, whether it's in a SEP or profit sharing plan. So A goes away because it's not true, right? It's not a true thing because it's not going to happen. B is a true statement. Yes, this would allow the employees to delay the RMDs until they retire. It would. It allows the employees to delay because you have to take your RMD at the later of 73 or retired, right? April 1st, 73 or retired if you're an employee. The problem is the owner going to want to incur the additional expense of having a qualified plan if it doesn't benefit the owner? Probably not. Okay. And so that's where your answer here, you look at C, it says, no, the owner would not be able to delay RMDs until they retire with a 401k. That is 100% true. So C is a true statement as well. D, you cannot offer a profit sharing plan if you already have a SEP. That's actually not true. You can. It's okay, but it's not really either way. So on the exam, you've got to realize who's the client. And that's part of the thing that's really the magic of this question is the owner of the business is the client. Is my owner of the business that's a client going to want to incur an expense for no increased benefit to themselves, just so they have an increased benefit to the employee? Probably not. And so your answer here, you're going to go with C. The owner would not be able to delay RMDs until they retire. The only reason the owner would want to do this is if they would also be able to delay their RMDs until they retired if they kept working. But because the way the law is, they can't do it. You're going to go with C here. Okay. That's something that we've got to understand on the exam. Yeah, who's the client? The companies in general. And I deal a lot in this arena. There's very few companies. They're not asking about Fortune 500 companies. They're asking about companies, mom and pop, 40, 50, 100 employees. They're not going to want to incur more of an expense if it's not going to benefit the owners any. It's just not something they're going to do. All right, so estate. Let's look at estate. Estate was number 6 and 10. And if there's any more from retirement, we can back look at those two. So looking at number 6, who went with C here?
Yeah, I actually did.
I put C.
C. Okay. So we got some C's here, and C doesn't mean you don't know the rule. C just means you read it the wrong way. So the question you've got to look at here is who's the citizen, who's the non-citizen? Right? The answer here is nothing. And so you get in the business for a long time like me, and you do this forever, you get a little cynical. And you think like the IRS does not care if the Canadian citizen leaves a bunch of money to the US citizen, because then the IRS can tax the mess out of that money, right? That is what they care about, getting tax revenue. What the IRS cares about is if the US citizen leaves a bunch of money to a non-citizen, they want to still be able to tax it. So if Jane was the one dying, she would need a QDOT. Who's dying in this question?
John.
Yeah. John needs nothing. John is the Canadian. He can leave all of his money to Jane, because guess who can tax all the money at that point when he leaves it to Jane? Our friends at Theirs. It's called Theirs, the IRS. If you spell it out, it says Theirs, and that's a good way to think about it. It's all theirs anyway. They get to keep it, right? So there. You tell how much I love the IRS.
Is that a good place to, Tim, you asked the question, who's dying in estate planning, right? Like, because it'd be very easy if you read that question in order for John to receive to think that maybe Jane's dying.
Yep. And so it's kind of like, they're married, Joe's a citizen. So when am I going to want to take my unlimited marital deduction? At death. My death to get my deduction, right?
Sure.
And so you've got to, it's kind of like the shell game, right? You kind of put, 3 shells down, put the ball into one shell, move it all around.
Yeah.
You got to pay attention to in these types of questions, who's the citizen, who's not, who's living, who's dying. Once you look at that, you'll see where's the money going. And you just think, if the US citizen is trying to get the money out of the United States, you got to have this queued up. If somebody's giving it to the person in the US, they'll let you do that all day long. Okay. And that's kind of one of the things that comes up here. All right. So let's see what else. I think we had number 10 here. Number 10 is an awful question. If you get it wrong, I'm not mad at you. We just put it on here to kind of annoy you. So that's a question that we can show you. But I do want to point out, sometimes you'll get a question like this that's super vague. Like, this guy's name's Josh, apparently, and what estate planning should he have? And we should know that by his name being Josh. If it was Frank, it'd be a different answer. He'd need different estate planning, 100% probably, right? But no, this, in all seriousness here, this is like the most vague. It's like walking up to somebody and meeting them on the street and saying, you should do this, after not even talking to them. But you will get some stuff like this on the exam. So part of the exercise here is to get you guys to not one, blow your top when you come to a question like this and get so frustrated. You're just like, this is stupid. I don't want to just, okay, how do I stay even keeled and answer a question, right? Because, we don't want you like assaulting the person next to you in the test center because you're frustrated with the question. So, and this is part of this could be understanding what is actually happening in the real world here. The most inclusive answer, the answer that is going to include all of them, or cumulative answer, is going to be D, revocable trust. You're not going to do a revocable trust and the attorney not do the rest of these things that are in A, B, and C. If I go have the revocable trust done, they're more than like they're going to have the will, they're going to do the living will, right? Or the healthcare proxies. They're going to set up powers of attorney, things like that stuff's being done if I go the route of doing a revocable trust with an attorney. It is the most comprehensive answer. And so looking at this, what would be the most comprehensive answer? It would be D. Now, I don't know if Josh needs that. So I could argue for a half hour too about A being the right answer, saying just get the guy a will. Right? Because I don't want him to die intestate. So at least give him a will. So this is one of those where if I see this, you got to answer it. You got to pick it. Right. So if you got to pick one, then you know what? Let's go ahead and pick one, and let's pick the one that gives us the best fighting chance to get this thing right. Okay. And that's why we go with that. So if you got that one wrong, I'm not mad at you. I'm not worried about it. It's not affecting your life in any way. But it does give us a chance to point out, go with the most comprehensive answer if you're looking at something. All right. All right. Any of the other ones like that we went through? And then I've got, what time do we have until? I don't want
to. Yeah, we could, however much time you need, probably 10 minutes, 15 minutes will probably be enough.
Okay. Let's just talk about the case for a minute, and then I'll let you guys answer or ask any other questions. I'm not going to I won't really get to much of the case answers, but I do want to talk about the approach that we want people to go through on a case, because you will get a case on the exam. This case is fairly short. It's about 2 pages. We do want you to read the case before you jump into the questions. But you got to remember, you're reading this case to just understand what's on it. You're not reading it from memory. It's not like they pull the case away. We see too many people taking too long to read the case, as if they can't go back to it if they have a question and they need to pull out a piece of data. Okay. So you're scanning this thing, right? You're scanning this case, highlighting key data, things that, like if I'm looking at this guy, Josh, I'm going to highlight the fact that he's 64. I'm going to highlight the fact that he owns 80% of JP Inc. I don't even know what that is, but he owns 80% of it. And he wants to retire at 70. Cool. Go to the next thing. She's 60. That's probably it. And, out of what's there. Okay. Then we go down. We're going to highlight some more stuff. All right. You're going to ignore insurance policies on this. The reason is they're going to have to ask you a question about the insurance policy or his estate in order for you to have to come back and worry about the insurance policy. But I would note that it's there. Maybe you highlight, the whole life insurance policy in the case, so that if you come back to it, now at least here's what life insurance policy is and it sticks out. You don't want to highlight everything here. You want to kind of be a minimalist when it comes to what you're highlighting, because if you don't, then you go back and look for the data and now everything's yellow or whatever color you're highlighting and it didn't do anything. Right? You're just reading the stuff again, but it's in yellow or red or whatever you do. And so that doesn't help you. Now I do, when I get down to this next page, I'm not reading through this balance sheet. You're not going to remember it. But if you get to question 10 and they ask you a question about it, you're not going to remember what's in the checking account. Aren't you going to come back and verify it anyway? Yeah. Okay. I want to scan through it. One thing that I do look at is this right here. I want to look at their net worth. This guy's they got a $20 million net worth. I look at that because if it's a couple, do they need comprehensive estate planning at 20 million? No. They're not above the estate tax threshold for a couple, are they? And so answers that are talking about a bypass trust, estate tax savings, they're kind of wrong. Do you see my point? And that gives me an idea right here, because they're asking if they die today based on this net worth. They're not saying, hey, should I do this in planning for 20 years from now? No. So when I took this exam, the exemption was $1 million, right? It was like 100 years ago. It was $1 million. It wasn't, well, yeah, I know you're getting some big eyes here, but that's what it was. Like, I'm old. I'm like older than dirt. Okay. That's just is what it is. But back when I took this exam, everybody needed to do estate planning, like big time estate planning. Estate planning attorneys were super happy because everybody was getting a bypass trust. It was like going on Oprah. Everybody won a bypass trust, right? They got this, they get that, everybody gets one, because it was such a low exemption amount, right? Everybody needed it. But now it's almost like we're doing revocable trust and some wills and some powers of attorney for people, and not too many people are having to do all this stuff. Now, depends on the state you live in, right? Because some states are different as far as the state planning that you need to do, but this is a national exam. So you got to think about that when you're taking this test. I'm not worried about what my state says. I'm worried about what the national exam says.
Mm.
Okay. But I do want to read these footnotes on here. So you are 100% going to go through these footnotes and highlight. They will hide bits of information in these footnotes that you'll get questions wrong because you missed something here. Okay. So that's the stuff that you guys really want to take a look at. Okay. So any questions on any of that? I'm going to stop the share and just kind of let's just talk. If you guys have questions on anything that I went over or just in general, I think we got a minute or two here to kind of answer it.
Well, I appreciate you going through all the questions and like being able to kind of, I think I learned a lot about like how to think about these questions and how some of them I may be overcomplicated. But I had like a more general question. Like I think a lot, like when would you start studying? Like I'm planning on taking the CFP in November. What do you think is like an appropriate amount of time, especially like even just going through Zon, like to start studying to where you're not giving yourself too much time, but you're also going and getting like
So too
comfortable.
much time, I don't know if that exists.
Okay.
Unless you're one that will put off today what, never do today what you can put off till tomorrow, that whole saying.
Mhm.
Kind of opposite of what the real one is. But, you know, we send out a pre-study. That pre-study is 100 to 120 hours
Mm.
before you show up to class.
Mhm.
So you want to kind of back that into life.
Okay.
You see what I'm saying? And because
Yeah.
there's no use of you trying to cram this into, having to study 4 hours a day every day.
Yeah.
I'd rather you look at this and say, hey, we're going to do, I'm going to do an hour a day, 2 hours a day, something like that. I just feel like you're going to get more out of it, right? The
Mhm.
law of diminishing returns comes into effect when you're trying to just do too much. The pre-study we give you is a lesson and a quiz. And then when you get through that module, you have a module test. Like general principles will have a module exam.
Okay.
Professional conduct, a module exam. It's very
Mhm.
organized, like you're taking a course.
Mhm.
The pre-study is more academic. It's basically making sure you understand the rules of financial planning. Like what are the rules for IRAs, tax forms, retirement plans, things like that.
Mhm.
All right. When you get to the review course, we start to synthesize it.
Okay.
Meaning, a lot of the questions on the exam are going to be, "What do you recommend so and so does?" Well, in order for me to make that recommendation, I've got to be able to do the analysis, which is what you're learning how to do in the pre-study.
Right.
Okay. And so we're kind of making sure everybody that comes into our review is on a level playing field with, hey, we've seen all this information
Yeah.
now, and it's test prep too, right? So we've got to get you in the mindset of we're trying to get you to understand there is a best answer here. All four of them might be bad. Which one's the best?
Mm.
Because there are many times on the exam you're going to look at a question and be like, these are horrible. I would never do any of these to my client. Well, guess what? One of them's right. So you got to figure out which one it is.
Yeah.
And so we talk through that process of which one is the right answer. And sometimes the way to get to the right answer is to get rid of the, other three and say, well, this is the least bad. Go with that one.
Yeah. Okay. So maybe like I mean,
But
I hear you saying it's like okay, 100 to 120 hours and kind of like that also kind of depends on the person, right? What does your
you in
schedule
school
allow for?
now?
But you do like so maybe like a 3 to 5 month period before is like
I would,
is like
you,
generous.
are you graduating May?
Graduating in May, starting a job at a financial planning firm in June, and then planning on taking it in November.
Have you talked to them at the financial planning firm?
Yeah.
Are they on
And
board
they're
with
gonna
this?
give me my
Perfect.
materials through Zon and everything
Okay. I mean,
whenever I am
that
ready.
was perfect because that's one thing I was gonna say. Make sure they are on
Yeah.
that they understand that, hey, I've got to study for this, right? Because I've talked to other people who've come right out of school and now they're like, all right, I gotta get my 7, I gotta get my 66, I gotta get my
Yeah.
insurance license, and they're doing all this stuff. And oh, by the way, hey, why aren't you studying for the CFP exam and getting clients to come in and work with us? So there's
Right.
a lot, and that's why I was making sure. So you don't want to like overwhelm yourself.
Totally.
Uh, so if you feel like they're going to be supportive, they're going to get this for you, 100%. Jump onto it. But again, the test isn't going anywhere. So it'll be here in November, it'll be here in March. Um, if you want to talk to them about what that time frame looks like, whether it needs to be November or March, that might be a good first step. Wait till you kind of get in the door there and see.
Yeah.
Uh, just kind of expectations, life in general. What does your life look like?
Yeah.
So that's, I mean, it's the exam's not going anywhere. I hate for people to rush into this thing. But yes, if you started in June, getting the testing in the November cycle, which is actually in October this time, which is weird, but that's when the test is.
Oh, it's in
Um,
October.
it's early.
Oh, okay.
This
That's
this
good to
time
know.
let me see when it is here. Hang on a second. Yeah, it is normally November, but I think they're testing early.
Okay.
Our last review class is like the weekend of October 10th.
Oh, okay.
Yeah. So the exam starts October 29th to November 5th for November,
Yeah.
which is way earlier. It's like 2 weeks earlier, I think, than normally.
Okay. Do you think
Which
the
is good.
series exams like are necessary as well as the CFP, or like I've had some people be like, are you taking the series exams? And I wasn't necessarily planning on it, but what do you like?
Depends on your
I'm just
employer.
curious. It depends on the employer.
Yeah, it depends, I think, what you're going to do.
Yeah, if you're
Uh,
going to be, is it FINRA certified, you'll need them in order to give advice. Now, if you're forward facing with clients, that's a necessity. But if you're SEC certified or an RIA maybe,
Hmm.
and you might be able to not have to need to take those.
Okay. So if you're
I
forward facing with
don't-
clients, though, you think the series exams are necessary?
if you're an RA, maybe not, because you're
Mm.
just really getting paid for the advice, and the CFP will take care of that.
Hmm.
But if you're going to be affecting transactions and doing trading and things like that, you will need. So it depends on the kind of firm you're working with as to what they're
Got
going
it.
to tell you to do.
Yeah.
And that's a conversation with them.
Yeah. Do you think it's like good to just get them like, because what if the firm I'm working for now maybe is like, oh no, you don't necessarily need them, but then if I go to work for a firm later on that maybe is like, oh, we do trading and we do that kind of stuff,
So,
then
so
is
they're
it
going to have
like
to sponsor you for it.
okay? But then
So
do I
like,
want
yeah,
to
yeah,
take it later on? I guess it doesn't
yeah,
matter.
you can. I mean, trust me, once you get through the CFP, the seven and those other things are not going to be.
Oh, really? Okay.
It
Yeah,
wouldn't,
you'll be okay.
it would be, yeah, they might take a little bit. I'd say the 7 and 66 might have to deal with a little more of a like regulatory history.
Okay.
Not to say there wouldn't be a little overlap there, but
Gotcha.
honestly, if I go to an RIA and they're telling me I don't have to take the exams, I'm probably not going to take them until I have to,
Okay.
just to be honest.
Okay.
Yeah.
That's really
So
good to
just
know.
talk with them. I mean,
Okay. Yeah, that's
and that's
helpful.
why I ask if they tell you, hey, we need you to get your 766.
Hmm.
March might be okay for this to the CFP.
Yeah.
Yeah.
I mean that's what I said. It's a lot at one time. I mean, when
Hmm.
I've got my 766, I've got my insurance license, and I did my seven kind of right after, or my CFP kind of right.
Yeah,
That
designation
was,
with like tax.
oh, can't hear anymore.
Oh, sorry. I said, did you ever do the wait, can you hear me now? No?
Can you guys hear me?
I can, yeah, I can hear you, Tim, but I can hear you, Katie or Kate.
Oh yeah, you can hear me or cannot?
Yeah, I can. Yeah.
Oh, okay. Hmm. Well, that's weird. I don't know why my audio is being interesting.
Sorry, Tim.
Not work? No?
Yeah, that's odd.
Oh.
I don't know if
Well,
you
he's gone now, so I think maybe that was
ran him off, Kate. Started.
yes.
That's
Oh, oh goodness. I asked
Not
too
sure
many
what happened.
questions.
Sorry, you guys there?
Yeah.
Okay, sorry about that. Not sure what happened. I mean, I don't know if you said something afterwards or not.
Oh no, all I asked is if you had ever gotten your EA designation for like the insurance or tax or more tax, I guess.
Yeah, it's the enrolled agent. No, my CPA wants me to. He wants me to work with him.
Mm,
Um, I love tax. I mean, taxes. I do a lot of tax planning. I don't want to prepare ever.
right.
Um, I do a ton of tax planning, and I think that's a super value to your clients is to be able to understand tax.
Okay.
Um, it's more of a value than somebody who's going to say, I can make you more. I can make you another 1% in your brokerage account. Or you
Right.
talk to somebody who says, hey, I can do some serious tax planning and help you save some money on the back side of it. They're going to want to talk to you all day.
Okay, got it. Because I'm an accounting major with a financial planning minor, so I have a lot of course knowledge in tax and I do enjoy it. And so something I was considering for just more in-depth tax planning ultimately, because I don't want to ever be a preparer and I don't care to go into audit, but yeah, okay, that's good to know.
I think there's a huge
Well,
need in
and
the industry too, right? Like
it's a ton.
financial planners that know tax and want to do it. So
Yeah.
And it's
we don't have
because a lot of EAs and a lot of CPAs are tax prep.
Mm,
And this is one thing that clients don't understand. They
yeah.
the CPA prepares your returns. They're not planning out your year with you.
Yeah.
You're going to see that client more than that EA or that CPA does, unless I've got a few that are really hands-on and they follow them throughout the years with their books and things like that, and they're very hands-on. But a lot of times they're not. They're very, you get me the documents at the end of the year, we'll tell you what to do. And then the client gets mad. I can't tell you how many clients are like, I need a new CPA. And I'm like, why? Well, I'm paying too much in taxes. Like, well, that's your fault for not getting,
Yeah.
with that, not doing the planning. I've
Mm,
got a doctor coming in next week that I'm going to yell at because, we asked him stuff last year. And he calls me 3 days ago and is like, hey, I had a big loss on my tax return last year. I was like, dude, like that's stuff we needed to know September, October, November.
yeah.
And we met with a CPA and him 3 times last year in September,
Yeah.
October, November. And never once did they tell us that, hey, this was what's going to happen.
Yeah.
But anyway, it's something where I'm like, dude, we could have planned for you so much better. Now we can only plan for this year and next year. So,
Yeah.
but those are the fun things because if you can talk to somebody who if somebody has money and they're making good money, they care more about the tax planning than what you can make them in their investments.
Mm, yeah. Especially with the older clients, I'm sure, who are going into
Even younger,
retirement and
nobody wants to pay taxes.
no.
People think they want people to pay taxes until they make a lot of money and they realize, no, I don't want to pay taxes.
Yeah.
Nobody wants to pay taxes.
Yeah.
So,
Yeah. Okay. Those are a lot of my questions. So, yeah.
all right. Well, thanks for having me on.
Yeah,
If you guys, have anything else, let me know.
I don't
All right.
think. Yeah, we really appreciate it.